Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat. Paris milling wheat. In mid-November last year, the market broke down and out of the combination of the mid-September to mid-November 2023 descending triangle, as well as breaking below the neckline currently at 235, the June to November 2023 head and shoulders top. In the process, the market created two new gaps, small ones since filled in. So let's now look at the gradually disappearing June to November 2023 head and shoulders top, disappearing off the edge of my chart. Targets for this pattern were a primary target at 215. Let me try and rephrase that. A primary target at 215 and a harder secondary one at 197. Both have been reached by February, thankfully. I'll have to repeat that. This leaves me with one big picture item that I'll bring to your attention once again. So as part of this big move lower, I would like to once again discuss the previously often mentioned big bear channel, currently 224 to well off the bottom of my daily chart. This bear channel was highlighted in dark blue on my daily chart and originates from June and October 2022, so it's coming up to 2 years ago. Since the low in early March, the market has staged a gapping move higher, admittedly due to changeover, but still a gapping move higher. It has risen up through the short medium moving average, currently at 207, and is at this time knocking on the door of the declining medium moving average, currently 216, and also the key 50% absolute Fibonacci line at 219. Now we could look at this action as starting to slow and maybe halt because of these two resistances and the nearby declining upper bear channel line in blue, or we could look at the action over the last few weeks as being a build-up to a possible bull flag, one that could easily challenge the overhead declining long moving average, currently at 229. Which will it be? As yet, I am not so sure, but I would look at the large amount of overhead ammunition we have from the previously mentioned head and shoulders top last year as being a significant factor in capping any rises. But I'll keep an open mind nevertheless. Minneapolis wheat. Back in late February 2023, and especially at the start of April last year, so that is now actually outside the parameters of my daily chart, the market constructed a large bear channel that morphed into what we now see highlighted in dark blue on my daily chart. A descending, expanding wedge pattern, currently 747 to down to well off the bottom of my daily chart. The upper trend line is currently escorted and reinforced by the declining long moving average, currently 748. Then in early December last year, the overhead declining short medium moving average, currently 670, highlighted in dark green on my daily chart, started capping prices. In truth, this moving average had been an effective cap in the market since mid-October 2023. Not tested, but effective nonetheless. At the end of December, prices gave up testing the overhead short medium moving average and headed lower, finally punching down through the support, which is now resistance between 693 to 708, and dropping down to the August 2018 high at 650, and a January to March 2021 congestion zone. Yes, a congestion zone from 3 years ago. A congestion zone between 625 to 650 even, which is where we are now. Now this also fits in with three other patterns I've spotted nestling like Russian dolls within each other. 22 weeks ago, I said the following of the first pattern, I quote, "is the nascent late August to date bear channel, highlighted in bright red on my daily chart, currently at 562 to 701. That's what it is at the moment." And I continue quoting, "This pattern is still operational, and once again, I note how we have a smaller bear pattern nestled within a much larger one, much like a Russian doll." End of quote. This pattern is still alive, though we've not really had any tests of it below or above. The next pattern is highlighted in purple on my daily chart and is the October 2023 to date bear channel, currently 616 to 701. This one has seen some touches, and the market has recently been close to the lower trend line, touching it 5 weeks ago, but rejecting it back up back then. I'd also note here how the upper trend lines of both patterns are at this time intermingled with each other, thus mutually reinforcing each other. Plus, we also have the declining medium moving average, currently at 695, which is nearby, adding further to the reinforcement. The final one is the most recent and is the late December 2023 to late January 2024 bearish shift pitchfork, a pitchfork inspired by actions in other weak markets. During the last 7 weeks, prices have tested and penetrated the lower time, highlighted in bright green on my daily chart, currently at 614. And in very recent times, the upper time, currently at 648, seemingly pushing up and over this one. However, I'm not sold on this idea of moving higher, not yet, much as I was not sold on the move down in late February and early March. I will again finish with my final quotes and thoughts from 5 weeks ago, as they are still valid, and I quote, "All these patterns are bearish, and they give varying opportunities depending on what time horizon you might be interested in. For the moment, continue to keep an eye on that 3-year-old congestion below, between 650 to 625, end of quote." London UK feed week. One of the key features of my daily chart, and it's a surprising feature, has been the extension of the neckline of the May to June 2023 reverse head and shoulders bottom, currently at 189.80. This is not a very notable pattern, a mini reverse head and shoulders pattern, if you will. But the extension of the neckline first acted as a pretty reasonable support and then later as an additional resistance, though I suspect in the background the September 2021 low at 181.70, and perhaps more importantly the 50% absolute Fibonacci line at 180.5 had helped in the past to prop up prices, now this year to cap prices instead. Please bear that in mind if we see any fresh attempt higher. In the bigger picture, there's been a double bottom during February and March. Prices have moved back up through the old congestion from March to April 2019 between 161.95 to 165.75, as well as the July 2021 and May 2023 lows at 164 even, the August 2020 low at 161 as well. The market has already reached the target area for the pattern in the 170 even area and is now hesitating under and around the mauve highlighted slowly declining medium moving average, currently at 173.15. This medium moving average has been an effective cap for the market since about late 2023, becoming more significant as we headed into December 2023 when we last saw it tested. The question now is what this hesitation we are seeing under and around the medium moving average, what will it become? Will it be a capping and topping action or a halfway hesitation for a move higher? It's too early to say just yet. Just be mindful of the 2019 base congestion below and the base of the double bottom below, and also of the long moving average and 50% Fibonacci line and September 2021 highs overhead. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Topic and ADM Investor Service International Limited. And here comes the final important bit.